If you feel like the start of 2026 is less about a fresh, smooth start
Right.
and more about just edging forward under this immense weight of problems that have been deferred or denied or maybe just deliberately ignored, well, you are not alone.
Hmm.
What we've really seen is this convergence of crises, geopolitics, pollution, the struggle for power. It all seems to be conspiring to turn this systemic strain into, well, a permanent condition.
It does.
So today we're doing a deep dive into some source material you sent us that gives a pretty stark look at this new landscape. Our mission is to unpack two major threads. First, how these high-stakes geopolitical standoffs, particularly around the US, China, and Taiwan, are reshaping the global economy.
And specifically the semiconductor sector.
Exactly. And second, how financial safe havens like gold and even Bitcoin are reacting to military shocks now amid all these other escalating risks, from AI to climate change.
You can pretty much forget the typical New Year optimism. What the sources confirm is that this structural strain,
Yeah.
it isn't a temporary phase. It's the new default setting.
So you're saying that to navigate this year, you can't just react to headlines.
No, absolutely not. You need to understand the underlying structural shifts. I mean, that knowledge is really the only way you're going to maintain any kind of resilience in this environment.
Okay, let's unpack that right away. Let's dive into the Taiwan crucible, starting with its economy. The performance recently has been fascinating.
It really has.
The 2025 data tells this powerful story of growth, fiercely driven by AI and semiconductor demand, which pushed GDP up over 7%. But what does the crystal ball show for 2026?
Well, resilience for sure, but a definite deceleration. The forecast is for around 4%.
4% is still really robust.
Oh, objectively, it's very robust. But what's fascinating is that the underlying economy is showing what analysts are now calling a deepening K-shaped recovery.
Okay, so on that upper arm of the K, you've got the tech sector just booming.
It's overheated. We're talking soaring valuations, massive profits. But this rapid expansion is creating some really severe bottlenecks.
Bottlenecks in what, specifically? Energy.
Energy, water, and talent. Taiwan's industrial base, especially those chip fabs, is incredibly resource intensive. That rapid expansion is hitting some hard physical limits, which means the tech boom itself is creating this intense domestic infrastructure pressure.
Right. And on the lower arm of that K, where are the sectors that are struggling?
That's your traditional industries. Machinery, chemicals, transport, they are all lagging significantly.
Why is that?
It's partly softer global demand, but also, frankly, increasing competition from low-priced exports flooding out of mainland China.
And here's the paradox, right? The official consumer price index, the CPI, seems contained at around, 1.7%.
Yes, but here's the thing. Stagnant wages are really hurting household disposable income. So unless you're heavily in the stock market, you are feeling squeezed, even if the government data says inflation is under control.
And that imbalance inside Taiwan is so consequential because of its global importance. When we talk about chips, Taiwan is it's the nerve center of the entire global digital economy. The analysis confirms its chip makers control over 60% of the world's contract chip-making capacity.
And that number, it jumps to over 90% for the most advanced nodes.
The really cutting-edge stuff.
The sub-5 nanometer tech, it's essential for AI, for next-gen computing, everything.
So the economic stakes of any kind of disruption are just terrifyingly clear.
They are. One analysis projects the loss from a total supply chain disruption would be an estimated $500 billion for electronics manufacturers alone.
Wow.
That's not just a big number. That is the leverage Taiwan holds. It's a foundational piece of the world's entire economic architecture.
But Taiwan is fighting on two fronts. There's the physical threat, but that's matched, or maybe even overshadowed, by this relentless cyber threat. Cybersecurity is genuinely described as Taiwan's other front line.
It is.
The scale of it is staggering. 2.4 million daily cyber attacks are recorded through 2024.
2.4 million daily.
Yeah.
It feels less like an attack and more like just constant noise. A sustained, low-grade digital war. And that rate is double what we saw in 2023. It's a high-stakes testing ground.
So what's the goal of all that pressure? What are they trying to do?
Two things. Mainly, they want to acquire sensitive information for future negotiations and critically steal tech industry trade secrets. That 90% advanced node capacity we just mentioned, that's the prize. It's industrial espionage at scale, combined with attempts to degrade government functionality.
Which is why their defensive strategy is so interesting. It's being positioned as this model of democratic digital resilience. They've gone beyond just the hardware. You see the Ministry of Digital Affairs, Motivir, the Cybersecurity Management Act of 2018.
But it's the citizen engagement that really sets them apart. Their strength comes from integrating that technical defense with civic participation.
Like the G0V civic tech groups.
Exactly. They run the joint petition site, which is a formal mechanism where any proposal that gets over 5,000 signatures requires an official government response. This builds huge public trust in government infrastructure.
And they're also building media literacy into their defense framework.
Yes, because they recognize that disinformation isn't just a nuisance. It's an existential socio-political threat that requires resilience at the citizen level.
So the digital defenses are hardening. Let's shift gears and look at what's happening on the water. How did the military posture change as 2025 closed out?
Well, the geopolitical environment, it escalated noticeably. China ramped up the pressure significantly in late December. We saw large-scale live-fire exercises that effectively encircled Taiwan. It was a massive show of force.
And it wasn't just the exercises, right?
No. They also had a provocative transit of a PLA aircraft carrier strike group right through the Taiwan Strait. Analysts suggest this is all intended to normalize the pressure, to make these huge operations seem routine, and to signal their capability for power projection.
Which brings us to the U.S.-China strategic dilemma. The communication picture here seems highly delicate, especially with the limitation of those key military and high-level dialogues in the second Trump administration.
The risk this creates is significant. The lack of institutionalized crisis management channels. It just drastically increases the possibility of miscalculation.
Yeah.
When channels are dormant, when military contacts are limited, your decision-making becomes compressed and rigid. And in a high-speed, volatile place like the Taiwan Strait, you cannot rely on improvising under pressure. You need established protocols, and those are either absent or severely curtailed right now.
So in response, we're seeing regional players embrace this strategy analysts call deterrence by preparation. The Quad held a key training exercise in late 2025. What was the focus there?
It was decidedly unglamorous, but absolutely essential. Military logistics integration.
So not shiny new weapons.
Not at all. They focused on things like expeditionary logistics, rapid resupply in these distributed maritime environments.
So the message is basically, our supply lines won't collapse on day one. Logistics resilience equals strategic credibility.
Exactly. The logic is simple. A force that can sustain itself is a force that doesn't panic. And by building this quiet connectivity, they're showing real deterrence without forming a formal military alliance, which lets them avoid being framed as a hard military bloc by Beijing.
Let's shift to economic strategy. The tech decoupling between the U.S. and China, particularly in semiconductors, is accelerating, and the forecast impact is severe. It's predicting a global market contraction of up to 34% by 2026 if this continues.
And China is responding by institutionalizing its economic statecraft. They introduced a revised foreign trade law.
What does that do?
It explicitly allows them to impose countermeasures against any foreign entities engaging in what Beijing calls discriminatory trade restrictions. It gives them clear legal cover for targeted retaliation against anyone complying with U.S. tech sanctions.
Meanwhile, the global supply chain is desperately searching for alternatives, and India seems to be rising in that role. We saw Apple talking with Indian semiconductor firms to expand assembly and packaging.
Right, which aligns perfectly with India's production-linked incentive, or PLI, schemes. And India is balancing this by diversifying its entire portfolio. They finalized free trade agreements with Oman and New Zealand, revamped a tax treaty with France.
And they also sealed the Realos military logistics pact with Russia.
Crucially, it streamlines defense cooperation. New Delhi is actively calibrating its relationships to maximize its strategic autonomy between all the major power centers.
Okay, let's turn to the markets. Early January 2026 gave us an unexpected geopolitical shock. A surprise U.S. military operation in Venezuela.
A huge shock. It involved airstrikes and the capture and removal of President Nicolas Maduro.
And China condemned it immediately, calling it a hegemonic act.
Well, China's reaction wasn't just diplomatic signaling. It's rooted in the structural asymmetry of its relationship with Caracas. Venezuela routes about 85% of its crude oil to Chinese refineries.
And they had that massive oil for loans scheme.
They did. Caracas had cleared about $51 billion in debt through those schemes. It creates this strategically vital resource for manufacturers' dependency, so the U.S. action was a direct challenge to a key energy lifeline for Beijing.
And the market response to this shock defied some expectations. Gold prices rebounded strongly, surging above $4,400 an ounce.
It absolutely reaffirmed its role as the traditional ballast in a military conflict. Gold is still the world's most recognized hard currency of wartime. It's pure flight to safety.
But the digital asset reaction was the real story here. Bitcoin was, well, basically unfazed. It recovered from a brief dip and then recorded a 4-day winning streak right after the shock.
And that performance really signals its evolution beyond just speculative sentiment. It's becoming a macro-resilient asset. It's earning trust by delivering steady performance during a genuine crisis, acting as a non-correlated hedge.
And then we saw the oil anomaly. Despite a military intervention in a major oil producer, crude prices actually dropped.
That drop was due entirely to the background context. A massive global supply surplus, huge inventories, and very low OPEC plus tensions just neutralized the fear of disruption from Venezuela. The market was simply drowning in supply.
We also saw some interesting research comparing safe havens against sustainable assets, looking at the blue economy and green finance. How did gold and Bitcoin perform there?
The research showed distinct roles for both. Bitcoin demonstrated really robust safe haven characteristics, specifically against blue economy assets. So things like investment products focused on sustainable ocean tech, which the sources label BJLE and OSIN.
And gold.
Gold was generally superior as a diversifier against traditional assets. However, when you look at cost effectiveness, Bitcoin proved to be a more cost-effective hedge for several blue and green assets. But for other resource funds, like those tracking natural resources or solar tech, gold was still the preferred instrument.
So they both have distinct, valuable, and non-overlapping roles.
Exactly.
Okay, finally, let's look forward at the accelerating structural risks for 2026. First, the sources flag a big financial concern over an AI bubble being driven by so-called circular deals. Wait, circular deals. That sounds suspicious. How does that work?
It's a bit technical, but essentially, capital just circulates within a closed tech ecosystem. Think Microsoft, NVIDIA, OpenAI. A major tech giant invests billions in an AI startup.
Okay.
That startup then commits to spending that capital right back with the original investor, or its partners, on cloud services and specialized GPUs.
Ah, so the money never really leaves the ecosystem. It just goes from the investor's balance sheet to the startups and then right back again.
Precisely. And this fuels this rapid, seemingly endless expansion in these sky-high valuations, while potentially masking the true underlying costs and, real market adoption outside that narrow circuit. It raises serious concerns about a reckoning if the actual productivity gains don't show up fast enough.
And beyond the financial risk, the non-financial risks from AI are also soaring. Public concern is extremely high. I think 57% of Americans view the societal risks as high, specifically citing misinformation.
That is the core fear. The concern is the speed and the industrial scale at which generative AI can now churn out convincing deepfakes and mass misinformation. This tech just accelerates social discord faster than people or governments can possibly counter it. The governance is lagging way behind the capability.
We also have to talk about climate extremes, which are now structurally the new normal.
The data is stark. 2025 saw devastating events. A Category 5 Hurricane Melissa in Jamaica, record flash floods in Texas. But here's the number that should stick with you. Experts reported that 89% of the record-high U.S. temperatures in 2025 were made more probable by greenhouse gases.
89%. So that's not a one-off event. That's a measurable structural factor defining our weather now. It's a seasonal expectation, not an anomaly.
That's right. When nearly 9 out of 10 temperature records are scientifically linked to human activity, climate resilience stops being a long-term goal and becomes an immediate economic and infrastructural necessity.
And finally, the structural risk to global health from antimicrobial resistance and disease outbreaks. This seems to be the quiet crisis compounding everything else.
It's deeply worrying. The threat from AMR is growing relentlessly. About 1 in 6 bacterial infections now resist standard antibiotics. And this happened alongside a surge in outbreaks in 2025. We saw over 300,000 cases of cholera in Africa, record dengue fever in Latin America.
And we're even seeing the return of diseases we thought were basically gone.
Exactly. Even in wealthy countries, vaccine-preventable diseases like measles are resurging due to vaccine hesitancy, placing this extra unnecessary strain on health systems that are already facing these climate-driven and AMR threats.
So we've covered political pressure, economic divergence, geopolitical shocks, and these huge structural risks. To bring this all full circle, how do these converging threats relate to historical precedents?
They lead us right back to the Cuban Missile Crisis in 1962. The resolution of that crisis was successful because of two non-military things. First, institutionalized communication, which led directly to the famous hotline, and second, a credible political exit strategy.
Right.
In 1962, that was the public firmness paired with the quiet flexibility of withdrawing Jupiter missiles in exchange for a non-invasion guarantee for Cuba. They created space for the enemy to climb down without losing face.
So the core lesson for the Taiwan Strait today is that deterrence is necessary, but it's completely insufficient without escalation control. Wars can erupt not from malice, but from compressed decision-making, miscalculation, and rigid signaling. And the speed of modern information just amplifies that risk compared to 1962.
It absolutely does.
And that leads us to the final provocative thought we want to leave you with. If the PLA is structuring its military planning around the ability to achieve a strategic decisive victory in a Taiwan contingency by the specific target year of 2027, what does this aggressive near-term timetable imply about the diminishing window for political creativity and the urgency of institutionalizing those vital, reliable crisis management channels right now? That's what we need to be thinking about as 2026 unfolds.